Keep it Econ 100. You already know. Today I'm going to talk about long-term stocks, long-term vision stocks. Three stocks that you guys should probably hold in your portfolio. Today I'm going to talk about Dutch Bros, Elf Beauty, and Celsius. These stocks are not trendy. They just stocks that you should be holding in your portfolio because these are the modern day consumer stocks that are going to go higher and higher and higher. It's not a fad. These are fundamental shifts in the consumer spending, and these are the stocks that are taking control of that. So if I were you, I would potentially put these in your portfolio. This is not financial advice, and I'm not a financial advisor, but I'm just recommending some stocks that are based on my opinion, based on the data that I present. And if you want to buy them, you do so in your own risk. But these stocks will go higher. They will go higher. First up is Elf Beauty, a popular cosmetic and skincare company known for its accessible pricing, focusing on social media engagement, and commitment to being cruelty-free and vegan. When considering investment in Elf Beauty, there are several key reasons that frequently come up in the investment discussions, often highlighting its strong growth trajectory and innovative business model. So some of the reasons you might want to consider buying Elf Beauty: strong growth in market share, innovative market and consumer connection, value proposition and accessibility, and strategic portfolio expansion. In its portfolio, it has brands as Elf Skin, Well People, Key Social Care, Natrium. It also has a good financial health and profitability. The company generally exhibits strong gross profits, and they have a relatively low debt to equity ratio, which means it's a healthy working capital, suggesting a solid financial foundation to invest in the future growth. Next up, we're going to discuss Dutch Bros Coffee. Dutch Bros Coffee, very comparable to Starbucks. A lot of people like this coffee here. You look at the Dutch Bros parking lots when you're driving around, they're always packed. They remind me of In-N-Out burgers. This may also be a long-term stock, a good company that you might want to take a look at it. Do your research, but this may be a long-term stock that you guys might want to take a look at for the long term. Let's go ahead and dig into the stock and see what's going on with it. All right, for the year to date, you see Dutch Bros is down. Well, year to date, let's go to year to date. Year to date is down 5%, almost 6%. Let's go for the month. For the month, it's down 28%. That's a lot. That is a lot. This may be a good entry to get into to buy the stock. Let's look at the year. All right, for the year, it's up 65%. Let's look at the max. The max from here is up 21%. Let's look at last week, last Friday. Okay, down 0.49%. Let's look for the week. Down 9%. But that month, look at that month. That month is down 28%. Come on, guys. This may be a reason. This may be a good entryway right here to buy this stock. It's down a lot. So let's compare it to Monster. Oh, not Monster. Let's compare it to Starbucks. All right, so Starbucks is in the purple, Dutch Bros is in the blue. So there we go. Starbucks is up from the start of the company or the start of the stock being listed. It's up 26,000% compared to Dutch Bros was only up 57%. Now, mind you, think about this. Starbucks has I have almost, I don't know, 17,000 Starbucks in the world. Dutch Bros have got about 500. So Dutch Bros has a long way to go. This may be a good long-term investment. Do your research, but take a good look at Dutch Bros. This may be a good stock for long term. Next up, let's discuss the Celsius Holdings. Very good company, very comparable to Monster Beverage and the Red Bull. It's basically an energy drink. It's gaining a lot of traction in the NFL right now. There's some commercials going on with the Celsius products. This may also be another long-term stock that you guys might want to take a look at. So let's look at the company and look at the stock. All right, so looking at the stock year to date, you see that it's up almost 100%. So if you'd have bought it here at $29 on January 2nd, you'll be up double your money right now. But let's see what's going on for the month. For the month, as you see, it's down 8%, 8.8%. This also may be another entry for you to get into. You see that was at $61, and right now it's at $54. 61, that's almost $6 that you can gain just from buying this stock. Let's look at the year. The year is up 73%, but year to date, 99%. Let's look at the max. Max 238%. Not bad, but let's compare it to Monster Beverage. So Monster Beverage is the dark purple, Celsius is the blue. All right. Monster Beverage from start to begin, from start to end, or start to today, is up 76,000%, and Celsius is up 6,000%. Celsius has a long way to go. Again, this is another new company. It's not as old as Monster. This is another big break that we may take advantage of. This may also be a long-term stock that you might take advantage of. You see that it has a long way to go. Could you imagine if you put $1 in today and it gets you 76% on that dollar? This may be something that you want to take a look at for long term. Just remember, when you're investing in growth companies don't usually pay dividends. They usually reinvest their profits back into the company so they can keep growing, further growing. But this can lead to substantial value appreciation over time as the company scales. Additionally, they have a very strong brand presence, customer loyalty, providing a stable base upon which to build. Yet, when you invest in these companies, these growth companies, it isn't without risk. They can be more volatile and depend heavily on market conditions and consumer trends. So you want to do your research. Researching and understanding the company's business model and market position is very crucial before you invest in these stocks. So over time, the potential for growth stocks can offer substantial rewards, but you got to be patient. Got to be patient. It's all about patience, growth, and innovation. But be very patient. So in summary, when you invest in growth companies like Dutch Bros, Health Beauty, and Celsius, it can be a very strategic move for long-term gains. That's what I'm trying to tell you. Put in your long-term portfolio. Just build up a very good, solid position. Maybe like 10 to 15 starting out. If you got that, even one, and then build your way up to like 25 to 50 to 100. It's hard because it takes time, especially when we don't have as much money. But if you buy like one or two stocks of these and watch, and then maybe buy another one or two next week when they go down a little bit, or if we have a recession, you buy a whole bunch of them. Just make sure they be in your long-term portfolio because these are very good long-term stocks. You see it when you drive around. You go to stores, you see Celsius in Walmart. You see it in 7-Eleven. You drive around, you see Elf Beauty everywhere. And when you drive around, you see Dutch Bros. The parking lots are full. So just think about that. They're not even on the same scale as Starbucks yet. They got about 500 restaurants. So they want to grow. So these may be some stocks that you want to take a look at. Take a look at them. It's not financial advice, but it's just my opinion. But this might be something that you can build upon and get some money from if you invest in these three stocks. Keep it Econ 100. You already know.